Hey, welcome back to YT Finance, and this is the channel where I went to business school so you didn't need to, and today we are talking about the best fintech stocks to buy right now, which are set to dominate 2024. So we're going to be going over their latest news updates, upcoming catalysts, price targets, and what I personally think about these three fintech companies, and spoiler alert, I really do not like one of them, so please keep your ear out for that, and take heed of my criticism for that particular stock and company. Then the next article we're going to be analyzing is titled Why SoFi Stock Looks Like an Excellent Value Heading into 2024. So if you love Sofi Technologies, don't forget to go and annihilate that like button right now. Subscribe if you are new. Don't forget to become a member of this channel for as little as 99 cents per month because that's what keeps me here on YouTube. And with all of that being said, I say let's jump right into today's stories. Starting off, we know that fintech stocks have been on fire lately, but in a good way, ever since the Federal Reserve said that they are not going to increase interest rates and could potentially lower interest rates 3 times throughout the year of 2024, and this is phenomenal news for financial institutions like fintech companies. And this means that fintech stocks could potentially experience 3 catalysts once the Federal Reserve lowers interest rates. And one of my favorite fintech companies, of course, is Sofi Technologies, ticker name SoFi, ticker symbol SOFI. SoFi essentially operates as a digital bank, meaning that they have one all-inclusive digital financial app that would have anything you could possibly need in regards to financial products or financial services. And SoFi has demonstrated a very impressive ability to grow despite market volatility. And they are growing their market presence in a variety of various sectors, and they are one of the top competitors in the fintech space. One of the reasons why I like SoFi as a company and their SoFi stock is because of their fundamental factors which play a huge role in the success and future success of this company thanks to their comprehensive product portfolio, which would include things such as student loan refinancing, SoFi Money, home loans, personal loans, investment services, credit cards, debit cards, checking accounts, savings accounts, and many others. We also see them landing phenomenal strategic partnerships with very well-known institutions like BlackRock, which just furthers the overall prowess of SoFi stock. Currently, SoFi shares are trading for around $9.85 per share, while analysts believe it could surge up to $15 over the next 12 months. And in the next article, we're going to be diving into why they could surge up to $15 throughout the year of 2024. SoFi is continuously expanding their overall offerings, which has allowed the company to rapidly grow not only their share price, but also their overall business. On top of that, SoFi strategically targets people with an average FICO score of 746 or higher who have a weighted average income of approximately $160,000. This means that SoFi Technologies is not at risk of going out of business because of their extremely strong customer base, making them a leader and a dominant competitor compared to other fintech companies. But we'll talk more about SoFi Technologies later in the video. Right now, let's shine our spotlight on Block, ticker symbol SQ, because this company was formerly known as Square. And if you don't know, Cash App is actually owned by Block, and Cash App makes up a crucial part of Block's ecosystem. For instance, Cash App's performance marked a substantial 27% year-over-year increase in their overall gross profit, which tells us as an investor that they are experiencing robust growth right now, and this trajectory could continue well into the future. We also see that their growth in monthly transactions have also increased by around 11% year over year to 55 million, which demonstrates Cash App's ability to attract and retain their current user base. So not only are they keeping existing customers, but they are also attracting new customers, which is increasing their overall financial metrics. On the other hand, we also know that Block has a buy now pay later platform, which is phenomenal news. We also know that the company's gross merchandise volume growth is around 24% on a year-over-year basis, which again is even more good news. We also see that Block is integrating their buy now pay later platform into Cash App, and this decision signifies the company's focus on leveraging the synergies between their different product offerings, because if two different product offerings can work better together, why not put them together and potentially cross-sell or upsell current customers on other products or services within the company. Block, ticker symbol SQ, is currently trading for $76 per share, while analysts believe it could surge up to $100. Currently, I would think that both Block and companies like PayPal are trading relatively cheap right now compared to their historic ratios. So right now may be a phenomenal opportunity for you to look further into a company such as Block. And then last but not least, let's talk about Upstart, ticker symbol UPST, and spoiler alert, this company just does not do it for me, and I'll tell you exactly why in just a moment. First, let's talk about what the company does. Essentially, Upstart has a core strength in their AI lending platform to where they use artificial intelligence to determine whether or not somebody is eligible for a particular type of loan. And this artificial intelligence technology essentially allows Upstart to offer loans more precisely to potential borrowers that other banks and financial institutions have overlooked. The company also came out with a recent AI model, and after they launched their Model 15.0, Upstart significantly improved their overall model's accuracy by approximately 15%, which is good news overall for this company. We also see this company expanding in the overall automotive retail space, as well as home equity markets and other offerings, which just builds strength in the underlying fundamentals of this company. On top of that, Upstart has also facilitated approximately 114,000 loan transactions just during the third quarter, which marks a 5% increase according to historical growth metrics, and over 70,000 of these overall transactions were attributed to new borrowers. So it's good to see an influx of new borrowers into Upstart's overall ecosystem, and hopefully they can continuously attract fresh customers to their lending platform. And although I know that these overall positive trends suggest the fundamental progress of this overall company, this company just does not do it for me. They are extremely disconnected from their accounting ratios and their overall fundamentals. The share price is far too high for this company, coming in at $48 per share for their UPST stock, while even the most bullish positive analysts believe this company is only worth $42. So clearly it looks like there is a downside from this point forward. And in another video that I'm going to make, I'm going to be comparing and contrasting the top fintech stocks that you can buy right now, and I will give my personal thoughts about them, and I'll tell you which ones I personally hold in my portfolio. But in the meantime, just know that Upstart is very disconnected from their overall financial metrics, and I don't think this is a wise investment opportunity, and I think that there is further downside in this stock over the next year. But only time will tell, and make sure to look out for that upcoming video where I compare and contrast all of the fintech stocks that I like in more detail, and Upstart will be on that list, and I will go into more criticism in that video. Now let's round out the video talking about why major investors and investment celebrities are buying heavily into SoFi's SOFI, ticker name SoFi stock. Cathie Wood, who is the CEO of ARK Invest or ARK Investment Management, recently purchased approximately 180,000 shares of SoFi stock, and this transaction is worth approximately $1.4 million, which boosts ARK's overall holding of SoFi stock up to 1.9 million shares, which means the company owns around $15.3 million. Sofi Technologies has also impressed other investment celebrities such as Jim Cramer, who hosts CNBC's Mad Money, who has praised SoFi stock and particularly the CEO Anthony Noto's performance on how he is leading the company. And if you don't like Cathie Wood or Jim Cramer, that's completely okay, but this is good news overall for SoFi because the investors who do value the opinions of these investment celebrities, that means that it's going to draw more exposure to Sofi Technologies, which should increase their overall share price as more people invest into this company. Another thing I would like to note is that Cathie Wood's ARK Invest portfolio has actually benefited substantially from their investment in Sofi Technologies over the last year, and this is one of the reasons why some of her ARK funds are outperforming the market this year because of this phenomenal investment into Sofi Technologies, which we predicted on this channel during the beginning of the year. Sofi stock has already surged approximately 10% just over the last 5 trading days, and I think you as an investor should look further into this company to determine whether or not it's a good addition to your personal portfolio. But remember to practice proper risk management and not overexpose your initial investment more than a 5% portfolio allocation, meaning that if your overall portfolio is worth $100,000, please don't invest more than $5,000 into the stock, or at least that's the rule that I abide by, because that is proper risk management and it allows me to diversify in other very strong companies, because there are phenomenal investment opportunities in the stock market and you don't want to be over allocated into just one company, because that would lower your overall ability to invest into other opportunities when they present themselves. SoFi overall is more of a risky position, but I think the reward for this company is completely worth it, because this company is rapidly growing their top and bottom line in regards to their revenue, and they are anticipated to reach profitability. And once this company hits profitability, literally in the coming weeks, this company will receive a lot of action in their overall share price. So I would encourage you to try to get into this company before they become profitable. So I really want you to get into this company before they become profitable, and I also want you to try to get this company at the cheapest price possible so you can take advantage of their long-term gains in regards to their overall share price. But with that being said, I would love to hear your thoughts down below in the comments about SoFi Technologies, Block, as well as Upstart Holdings. And don't forget to subscribe to this channel so you can watch my next video about the best fintech stocks to buy on the stock market right now, to where I will analyze and critique various perspectives on some of the most popular fintech companies on the market right now. So with that being said, don't forget to go and annihilate that like button right now. Subscribe if you are new, comment your thoughts down below. Don't forget to become a member of this channel for as little as 99 cents per month, because that's what keeps me here on YouTube. And with all of that being said, I wish you the best of luck, happy investing, and I will see you in the next YT video.